Hello and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. All three major U.S. indexes fell Tuesday morning, as did global stocks. The downturn comes as fears mount about the spread of a potentially deadly virus that began in central China. Chinese health officials said that the newly identified virus has spread between humans. This increased worries about the fast spread across Asia, especially as people travel for the annual Lunar New Year holiday. The virus has already killed at least 6 people, and experts say it is similar to the coronavirus that led to the SARS outbreak in the early 2000s that killed nearly 800 people. The news sent shares of companies impacted by travel fears down. Delta stock fell nearly 3%, while American fell 2.5%. United Airlines also slipped 3%, with the company's quarterly results due out after the closing bell Tuesday. Meanwhile, Las Vegas Sands, Wynn Resorts, and MGM all slipped as well, given their exposure to tourism in Macau. Moving on, the World Economic Forum began in Davos, Switzerland, and President Trump helped kick off the event with a 30-minute speech hours before his impeachment trial begins in Washington Tuesday. Trump talked positively about the U.S. economy and said there has been a, quote, blue-collar boom that has led to low unemployment and more. Trump also spoke about the Phase 1 trade deal between the U.S. and China and his willingness to take on Europe on the trade war front. Meanwhile, the International Monetary Fund released its quarterly World Economic Outlook on Monday from Davos. The IMF expects worldwide GDP to climb 3.3% in 2020, which would come in higher than last year's 2.9%. The strong outlook comes after the U.S. and China reached a ceasefire on trade, and it expects trade volumes this year to rebound. The IMF also forecasts that U.S. GDP will grow 2% in 2020, down from 2.3% in 2019. China is also expected to slip to 6% from 6.1% last year. On the company side, Uber stock climbed 5% after it announced that it will sell its Indian food delivery division to a local rival. The ride-hailing firm also said it is testing out a feature that allows drivers in California to set their own fares in an effort to address the state's new gig economy law. Looking ahead, IBM, United, and Capital One are all set to report after the closing bell Tuesday, but streaming TV giant Netflix might take the spotlight today. Netflix has been the worst performing FANG stock over the last 12 months, and Wall Street has grown more worried about Netflix after back-to-back subscriber growth misses, its growing debt load, and mounting competition, which now includes Disney and Apple. Our Zacks estimates call for Netflix Q4 revenue to climb 30%, while adjusted earnings are projected to surge 70% to reach 51 cents per share. Investors should pay close attention to its subscriber guidance and what management says about Disney Plus and other new rivals. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks Rank #1 strong buy stock. Hello and welcome back to Free Lunch. Today we're breaking down why GoDaddy is a Zacks Rank #1 strong buy stock. GoDaddy is a company that many might know from their somewhat provocative Super Bowl commercials, but it is still a very successful company. GoDaddy helps people and businesses find domain names, build professional websites, and help manage what comes next. GoDaddy has 18.5 million customers worldwide, and it topped our Q3 earnings estimates. So let's jump in further. As always, I like to start with a look at the company's own website, which in GoDaddy's case helps anyone build their own website. As you can see, they became really prominent with their domain name selling business, and now they're offering much more beyond that domain name, creating websites, marketing, really that push into more of helping businesses and small businesses run some of their business practices. We should know that recently on January 14th, they're trying to push out this new company logo, which is Go, as part of their mission to appeal more to small businesses. So I just wanted to quickly note that, but in general, that's what you need to know right now about GoDaddy. They're trying to expand more into beyond just domain names, into helping small businesses run everything from marketing and more. So now we're going to go ahead and take a look at the company's stock price performance. So we can see the company went public in 2015. It's been on a pretty impressive run since then, up about 180%, which easily outpaces the S&P 500's 66% climb. And now if we go a little bit more recently, we can see it's been a little more up and down, still though 39% over the last 2 years. And we can see that in the last 6 months, things have been a little harder on GoDaddy, but after they beat our bottom line estimates in November, we're going to go now to the last 3 months. We can see that they are up. So right here, they're up now about 16% over the last 3 months, which outpaces the index. And now I want to go ahead and look at some of their valuation. So we're going to go ahead and look at their forward price to sales estimates. So we can see we're going to go back over the last 5 years to give people a sense of what's going on, and we'll go to an industry to give people their industry. So we can see they're currently trading far below that computer software services market industry, which is trading at about 7.1 times forward 12-month sales, which is far above GoDaddy's 3.7. And we can see that obviously a little bit of their stock price movement in the wrong direction recently has helped this, but if we go over the last 2 years, we can see that they're trading at, it's at 3.7 times forward sales, which is below their three-year median and well below their high of 5.7. So their valuation is in a solid position as well. And now I want to go ahead and look at what their top line has done over the last several years to give people a sense of what to expect going forward. So we can see they had 16% growth, 15% growth, 21% growth, and then 19% growth in 2018. So some solid top line growth from this company. And now we're going to go ahead and look at what to expect going forward. So for Q4, we're calling for about 12% top line growth and 32% growth on the bottom line for the fourth quarter of fiscal 2019. And we have an NA here, but that's just a little glitch in our system today. I crunched the number myself, and we're calling for about 12% top line growth for the full year, and then another 11% growth next year in 2020. To jump all the way up to 3.31 billion. And obviously this is a little bit of a slowdown compared to where they have been recently, but still some impressive double-digit top-line growth. And then this bottom-line growth is what looks even stronger for the company. So we're calling for fiscal 2019 to jump 25%, and then fiscal 2020 to jump 42% on the bottom line. And if we go ahead and look at this estimate revision activity, we'll see that their full year estimate jumped from 48 cents per share to 79 cents per share. So a big jump here after they posted blowout Q3 earnings. And then their full year fiscal 2020 jumped from $1 to $1.12. So some really positive upward earnings estimate revision on the bottom line. And we can see that, they crushed earnings estimates last quarter. Now, if we go up and look, we should note that this is still more of a growth focused stock, even though we noted that their value in terms of forward 12-month sales is pretty impressive. It's a Zacks Rank #1 strong buy at the moment, NA for growth, and importantly, it rests in an industry that sits in the top 6% of our more than 250 Zacks industries. So we have a situation where this company is a part of an industry that's expected to move in the right direction going forward. So GoDaddy, as we mentioned, has started to focus more on helping people market, run, and grow their businesses, and the stock certainly appears to be worth diving a little bit deeper into. So that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Also make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.